The two moving averages for Bitcoin are narrowing. They're squeezing and getting closer together, as we've seen in the past before, getting us closer to a bearish crossover in the future, which will officially end the bull market. But we're going to be talking about that in a lot of detail in today's video, so subscribe to the channel, like this video if you enjoy content like this going forward, and let's dive right into it. This is the Pi Cycle top indicator, which features the two moving averages, and when they cross over, we tend to see a bull market peak 5 days after that crossover. It's happened in the past a few times with quite good accuracy. In fact, it was one of the few indicators in terms of data science that preceded a bull market top and was very accurate in doing so. So we're going to be talking about this crossover and just extrapolating and propagating these two moving averages in the future to better understand where could we see a bearish crossover, because we can see that these two moving averages are actually flicking up considerably, and that means that this crossover is getting a little bit closer in time. And when we propagate these moving averages, you can see that comes down to a late December 2024 bull market peak or early January 2025 bull market peak, and it really does depend on when exactly these two moving averages cross over. But this is generally that process that begins at the end of December 2024 and ends at the beginning of January 2025, which is very, very interesting. And here's why. Because if we look at historical moments where Bitcoin has broken beyond old all-time highs, so for example here, and then we rally to the bull market peak, here we break old all-time highs and rally to the bull market peak, and here the same, whenever we break that old all-time high level, we then have a certain amount of time before Bitcoin peaks in its bull market. So when we broke beyond this old all-time high region in 2013, 266 days later is where Bitcoin bull market peaked. In this cycle, when we broke beyond that point, beyond those old all-time highs in 2017, we saw a bull market peak 280 days after that breakout. And in 2020 to 2021 cycle, 315 days after breaking beyond this old all-time high. So first of all, there is a period of time that can be quite easily isolated in terms of how many days does it take for a bull market peak to occur, and that is 266 to 315 days. So if we were to exactly just say, because last week is when Bitcoin broke to new all-time highs, or at least a week and a half ago, so if we start measuring that time from 12 days or so ago, then in 266 days, a bull market peak would take us to late November 2024. And 315 days would actually get us into December, closer to January. So that's really interesting, because that is very confluent with the end of December and beginning of January 2025 moment. And in fact, if you look at these lengthening cycles beyond old all-time highs, so essentially Bitcoin spends more time across each cycle beyond old all-time highs before finally bull market peaking, there is that lengthening in terms of a few weeks in each cycle, from 266 days to 280 days to 315 days. Could we see additional lengthening in this cycle, in which case that gets us even closer to this point that we've been discussing earlier, towards that end of December, early January moment? Because according to these cycles already, end of November, early December, mid-December maybe, is that bull market peak. But if we see lengthening beyond 315 days, that gets us to this moment, and we have that confluence with the Pi Cycle top indicator. And we've been talking over the past few weeks that when we see uptrends, we see this more sensitive moving average flick towards the upside, because it simply takes into account less days, so it's more sensitive towards price, so it moves faster. And so when price goes up, this moving average is going to flick more and get closer to performing that crossover in the future. But as you can see, this green moving average, which is a 350-day moving average that's multiplied by 2, this is also flicking up. So this is flicking up at a faster rate than this one, because this moving average takes into account less days, but both of them are flicking up. Nonetheless, this green moving average tends to act as a resistance across cycles. And if we go to this first chart, you can see that very clearly. This green moving average rejecting price quite considerably. This was a pre-halving year, so very different context here. But here we had a reaccumulation range below this green moving average before price expansion into price discovery. Here we saw rejection, here rejection on 3 occasions, in fact, and here in 2012, a upside deviation before a rejection. What I'm expecting more is a reaccumulation range around this region. Of course, we've upside deviated a little bit, but still we're going to see some rejection here before finally some sort of range, reaccumulation range before further upside into price discovery. And we can see that we're currently in this moment in the cycle. So in 2013 we saw a very easy breakout, but if we focus on 2017, you can see that there's a lot of upside volatility, downside volatility before we enjoy that price expansion. And even in 2021 we saw reaccumulation here before price expansion. So I'm expecting more of the same, whether it's just reaccumulation or whether it's very messy and lots of upside downside volatility before we're in the clear and see this first impulsive wave up into price discovery. That's probably something that lies ahead once we've moved through this pre-halving retrace period, and I'll be talking about the pre-halving retrace in the next video, so stay tuned for that one. Subscribe to the channel for that one. But very important to just note that this green moving average is always going to be that point of rejection for price, and it's currently located at 70k for Bitcoin. And the best we could ever get is a pullback back into this orange moving average, which is around 48k, which is not too possible. It's very unlikely we'll get to this point. And even if we focus on the recent moment where we got quite close here, we didn't actually retest this level, and general deviations below this orange moving average, that tends to occur in a pre-halving year. So we're now in a halving year, and it's unlikely we get to this orange moving average. So 48k is the best case scenario for bargain buyers, but it's also one of the least likely scenarios, unfortunately, given the buy side pressure that we're seeing in the market for Bitcoin. But generally speaking, very interesting to see this confluence in terms of how many days Bitcoin spends beyond old all-time highs. And at the same time, when we extrapolate these two pi cycle moving averages, so this is the confluence to be watching out for going forward. And with Bitcoin now dipping a little bit, and even if it continues to dip beyond this point, then these two moving averages may flick down a little bit, and as a result kick this can further down the road, maybe into Q1 of 2025, deeper into Q1 of 2025, which is going to be quite beneficial because the bull market would continue to go on a little bit longer than at the moment these metrics are saying, because at the moment the pi cycle moving average is suggesting end of 2024, early 2025 for a bull market peak, and this theory right over here is also suggesting the end of this year for a bull market peak, and at best early 2025 as well. Thanks so much for watching this video. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy data science content on Bitcoin going forward. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.